I'm going to make my presentation pretty short and sweet because I think we have a lot of material to cover tonight, a lot of great panelists, and a lot of questions from you guys. But I do want to point out, for one quick moment, the title of what we're discussing tonight, which is ICOs and the token economy. Notice that we're not saying that the words are not cryptocurrency and they're not blockchain technology, right? Because the two, you know, they are all interrelated, but there is a difference. And I think specifically that ICOs and the token economy are a relatively recent phenomenon. Can I get a show of hands? Who here at this time last year had heard of an ICO? Oh, wow, you guys are in the know. And who has learned about it within the last year? Okay, great mix of people. So what is an ICO? You know, I actually did try to Google this, and you would be amazed. I don't think there's actually a really good definition today. And I think it's a space that is so rapidly maturing. I think one day in the ICO industry is kind of like 1 year in any other industry. But at its very basics, you know, it often involves the raising of money from the sale of digital tokens. Usually it's prior to a network launch, although I think now you're starting to see trends towards people actually building out technology as opposed to just having a concept or a white paper. Usually it's for cryptocurrency, although you know there's certainly exceptions. There are ones that are accepting fiat. Usually it's for a decentralized blockchain project, although you know, we're increasingly seeing a lot of people trying to back-end their business model on the blockchain in order to ICO. And so, you know, that raises a lot of interesting questions in terms of what are we really doing? Like, are these scams? Is this some crazy hype train? Or is this, you know, the next internet revolution? So this is a quick chart of how much was raised in ICOs in 2017. Keep in mind that in 2016, it was, you know, very much not a trending topic, and in 2017, it grew to nearly $4 billion, and that is pretty fast growth and rather incredible. And it's not sector specific, right? You're kind of seeing everything from infrastructure, financial services, even energy. People are saying, you know, this is the next internet revolution, and we are going to see it affect every single industry. Now, you know, when it comes to how ICOs are related to blockchain, I think you have to take a step back and look at what are the distinguishing features of blockchain, right? We've got philosophies around consensus, provenance, immutability, finality, and all of this is basically supposed to culminate into this, I would say, this culture of decentralization and trustlessness. So, you know, I would say in the earlier part of 2017, I was definitely getting a lot of phone calls that were saying, hey, I heard if I do an ICO, it's unregulated. Is that true? And the answer, of course, is no. And then, you know, the SEC came out on July 27th and said, you know, actually, here's a little bit of education. And, you know, over the past couple months, ever since July 27th, there seems to be this question in the space of, oh, are you selling a utility token or a security token? And the funny thing is, it's actually not mutually exclusive, right? You can have a security that has utility features. And that's one of the most mind-boggling things about this industry. It's like having Disney stock, except it's also your annual pass. And one of the more interesting things I think about, you know, these tokens is, what exactly are you getting? I get this question a lot, and literally the answer can be anything, everything. It depends. For some, it's like a prepaid gift card. In others, it's like membership into a network, right? With every single different token, you may be getting something different. One of the more interesting things about ICOs is, a lot of people have talked about, are we flipping traditional finance on its head? In some ways, ICOs are a subset of crowdfunding, right? If you guys remember Kickstarter and Indiegogo, not to say that's not relevant today, it's just that this hype train is, much more intense. But these were pre-product, concept level ideas that people would fund, the community would fund, and the powerful thing about it was the founder wouldn't have to go to VC or go around trying to raise traditional capital, and it wasn't, the gatekeepers weren't, these perhaps stodgy old institutions. With ICOs, it's almost the same thing, except I would say the community engagement aspect is even greater, right? But again, we're now confronting this idea of, wow, can we really start a company, a project, and not have institutional financing be that roadblock, be the ultimate decider of whether or not we even have a good concept or idea? So, I don't know if there's any lawyers in the room, but the Howey test is something that, if you took a securities law class, you learned it, and then you promptly forgot it unless you actually went and practiced securities law. And the funny thing is that in 2017, suddenly every other developer could recite for you the Howey test. So it's suddenly become one of the most popular pieces of law that's widely known. But I think it makes sense to take a second to think about, why do we have regulation? Why is there the Howey test, right? And so let's go back to a second to 1929. There was this thing called the Great Depression, and the whole reason why the Great Depression happened was because there was a lot of hype, there was a lot of excitement in the capital markets. There really were no rules. Anything was getting listed. You did not have requirements for disclosure. There really were no regulations. The SEC wasn't even around back then. And so if you look at from the Great Depression, we got the SEC, we got a lot of regulations, and if you really look at what is the mission of the SEC, it's almost, what is it? It's a balancing act, right? They have two competing missions. One is investor protection, but the other one, and equally important, is capital formation. And so the real question comes down to, how do we balance these two competing missions? So, when I look at the ICO industry, I'm reminded of what Warren Buffett once said, which is, be fearful when others are greedy, and greedy when others are fearful. Are ICOs scams, right? You see all these companies flocking, to go raise money, all these, failed startups that had never previously been able to raise capital, trying to suddenly put their projects on the blockchain. There's often criticism, hey, there's nothing more here than an idea and a white paper. There's a lot of lack of governance and accountability. And then what is a scam? If you fail to execute, is that a scam, or is it straight up fraud, right? Like the line suddenly becomes very, very blurred. I think we're in the really, really early days of this industry. There's a lot of issues to work out. There's a lot of infrastructure that still needs to be created. So for example, my company, Sagewise, what we're doing is we're creating dispute resolution infrastructure for smart contracts. $1 billion in value was lost in 2017 in smart contracts, and that's because they have coding errors, they have security vulnerabilities. People genuinely will need recourse to amend, modify, terminate, and genuinely dispute their smart contracts. And so we are basically creating the infrastructure, You know, everything from a mechanism to freeze your smart contract, notification monitoring, the dispute resolution marketplace, because how you resolve a $5 dispute is very different from how you resolve a $5 million dispute, all the way to collections enforcement, right? Because you know, there does need to be accountability and there does need to be governance. And ultimately, I believe at the end of the day, the blockchain industry as a whole cannot and will not be successful unless you can instill transactional confidence and certainty into this space. And we're not the only ones. There are other fantastic infrastructure projects out there working on identity and reputation. We have one of them here today, right? And so I think you're going to see a lot of evolution in this space. And as that evolution happens, I think we're also going to get a lot of clarity in the regulations. And you know, hopefully our wonderful SEC panelists will be able to answer some of those questions for us today. All right, thank you.
Good evening. My name is Eric, and I'm going to tell you a bit about our project. I was asked to tell you a bit about our project. And before I launch into the update about our project, I wanted to just tell a story about how we got to our project. So our project is called Hub, and it's got this name, Human Trust Protocol, made up from somebody in the audience who is here today. And so we started about a year ago, you know, thinking about blockchain and trying to put our ideas together around, you know, what we should try to do with blockchain and to create a protocol. And at that time, there was a lot of news about the elections that had just happened, meddling and, you know, fake news. And it occurred to us that a lot of these problems actually originated from kind of the limits that we're seeing on the internet today, that there's really a lack of authenticity and a kind of a lack of trust and accountability. And we saw that really across many different kinds of, you know, systems that exist on the internet. And we thought we could actually do something about it by building something that was blockchain enabled. And so probably you've read a lot about what blockchain is about and what it tries to solve. And one of the fundamental ideas that we have is that blockchain is really great for trust and specifically reputation. So we believe that in about 5 years' time, that billions of people will use blockchain to create trustworthy relationships. And that we're building a trust layer that is going to be as important, as significant as something like TCP/IP on the internet. And the reason for that is that we all today live in a world where we are using the internet to interact with everybody else. It's become a medium for people to send messages, to share information, and trust is really fundamental to all of those interactions. And so we have this thing called the Human Trust Protocol that we're working on. And so what is it? It's a decentralized trust network where people have portable trust and control their own reputation data. So let's just break that down a little bit. Talk about portable trust first. So today, when you have data, reputation data, your own reputation data that is stored in many of these kind of marketplaces or social networks, it turns out that that data about you is locked up in the servers of the platforms that you're using. And so when you go and you invest a lot of effort into one platform and you want to try something new, it's almost impossible to do that. So you've got to rebuild your reputation on new services. So the idea around portable trust is that you can take that information, the trust that you've developed in one community or one service, and move it to new communities and be a trustworthy source anywhere you want to be on the internet. And then the other idea, which is related to portable trust, is that you are really in control of that information. So it's like your profile that you own, and you can choose to share it to the extent that you want to make yourself trustworthy in new places. So why is this important? Why is trust important? It really comes back to economic opportunity. And there are lots of things that we're doing today on the internet that really create economic opportunity, for us. So the sharing economy is growing. Social networks seems to have no end to it, as well as messengers. And then there's a very interesting aspect around B2B, which actually, if you look at it, there's a lot of activity on B2B these days, but actually most of it is off-platform because the whole need for trust is actually more complicated in the business scenario. So not only do you have a lot of those activities off-platform, but you also have them off-chain. And then finally, there's this very interesting idea around offline or online to offline, the bridging of the offline world and the online world, and how do you interact between those two. So all of those actually contribute to greater economic opportunity if you have trust between people who are interacting in that way. And we've been looking for a long time for market numbers and market opportunity numbers, and it's really hard to quantify because the protocol that we're working on, the technology around blockchain, is just very disruptive, right? So, but we're talking about really massive, market opportunities that in a few years' time add up to trillions of dollars of transactions every year. So you're actually talking about meaningful fractions of world GDP and so forth. And so that's kind of the opportunity that we're going after. So how do we solve this? So our insight is that we want to use a public and decentralized blockchain. And for the first time, we're able to actually enable users to put their reputation data onto a blockchain so that they can control it and make it portable. We also want to make it permissioned. We're going to use some fancy cryptography, around something called zero-knowledge proofs that basically allow users to disclose as much or as little as they want, and to also attest to things that they want to prove about their trustworthiness. So, for example, if they've done many different kinds of projects, they ought to be able to prove that to people, to potential clients who want to know that they've been very successful at that. And then with our tokens, we have a novel use case around using tokens. People who have tokens can use it to stake on interactions, and basically it's sort of a bond that says, you're going to act in a trustworthy way, and if things go well, you're going to get those things back and be rewarded with some additional tokens, and you can possibly lose them if the outcome doesn't go well. So just like everybody else, we've been trying to build this, and it is definitely the case that the hype is ahead of the reality. So we've suffered from a lot of the challenges that I think all of the developers in the blockchain community and the crypto community have experienced. We're working with the technology and really trying to build it. But from our perspective, we see that there's some really important things that we need to do to bring blockchain to the mainstream. And one of them for us is that it's really important that we not just work on the technology, but we look at what users out there really want to solve, what their pain points are, and really map this technology to the everyday use cases and really provide user value for them. And then secondly, blockchain is cryptic, right? You have to learn about wallets and tokens and cryptography and those kinds of things. And those are just not things that everyday users use, right? And so I remember back in the internet.com times, people didn't know what a URL was, and now we all know what a URL is. So there's some learning that has to be done, but if we can really simplify the user experience and build still very easy to use applications, we're going to go a long way. And those are things that our team is focused on. So we're really trying to turn this thing into real reality, right? All right. So the first thing that we're doing is we're creating this reputation system called ICO Hub, and it's a proof of concept around ICOs, and it's using our protocol. And the second thing that we're doing is we're working with developers in the community and partnerships to really integrate our protocol into their apps and provide more trust and reputation. So our dream is that we're going to live in a world where we're going to help really increase economic opportunity for users who are on the internet and also people who are not yet connected to the internet. We really believe in democratizing opportunity so that the organizations or the entities that maybe have the most resources and the loudest, maybe are not necessarily the best ones to, provide opportunity or to get opportunity. And then I was asked, let's just be thinking big. And so I want to talk about this idea about the kinder internet, which is this idea that, today really a lot of the interactions that go through, there's really nothing at stake that users put down. And so as a result, you have a lot of abuse around the internet. So if we actually have some more accountability and more authenticity, we can actually get to the point where the internet itself is more useful and we can have more friendly and productive interactions. So that's it. We have free t-shirts at our table. And you just have to do a few things for us on social media. Thanks.
So the next presenter we have is Richard Craib. He is the founder of Numerai. Previously, he was a data scientist at an asset management firm with $15 billion under management.
So I'm going to be talking about Numerai. Numerai is a hedge fund, but we do something different, which is we give away all of our data. And this is an unusual thing to do because giving away your data is like giving away your edge. And so we had to figure out a way to do that. And the way we did that is basically finding a way to share data without really sharing it. And so this is what the data on Numerai looks like. It's kind of got nothing to do with the stock market, but it has certain patterns inside of it that actually can be, like, we know what the signals from this data mean, but the people who are modeling it don't. And this is this is using certain kinds of obfuscation, similar to homomorphic encryption and things like that, order-preserving encryption. And the point is, all this predictive structure in this data is preserved, but people have no idea what they're doing. So that's what Numerai is. We're built by a network of data scientists all around the world. Some of them are anonymous, and they all come download our data, do machine learning, and send predictions back to our fund. But the big problem with this was overfitting. And what overfitting is, it's kind of like when you have a back test that looks really good, but then on live data, the performance is really, really bad. And if you have a fund in real life, what happens is people tend to not overfit because it's their own fund. But if you have a fund where anybody can contribute, we have weird outcomes where lots of people create multiple accounts, submit predictions they don't really believe in, and ends up creating a big problem. So we had to figure out a way to solve this problem. And that's where we came up with our token, Numeraire. Now, Numeraire was announced more than a year ago, and actually has been fully operational, according to everything in the white paper, for more than 6 months now. And it was just to do one simple thing, which is to prevent overfitting. And the only thing you can do with it is stake it. And by staking your predictions, it's like you're making a claim that you really believe in your model and you really believe you haven't overfit. And so this is what Numerai looks like right now. The blue ones are the staked models. Actually, this was like a week ago. Now there are even more users that have staked. And on Numerai, actually, because we gave away the token, and we didn't do an ICO, we gave it to the people who actually are going to most likely to use it. And so we gave it away to our best data scientists, and because they were the most likely to use it, they did use it. And actually today, I think it's 12 out of the top 15 holders of Numeraire use it every single week. So it's a really good example of a token that's being used. And also, it has the exact intended outcome that we expected. So we can backtest some of these models, and the models that don't get staked have a Sharpe ratio of about 1.6, and the models that do get staked have a Sharpe ratio of about 2.2. 2.1, 2.2, depending on the cost model. So not only are people using it, but it also is super effective. So, yeah.
All right, so we just heard from Richard and his very exciting project, as well as Eric from founder and CEO of HubToken and one of the former co-founders of LinkedIn and its CTO. I'd also like to take a minute and introduce Amanda Straub. She's the senior counsel with the cyber division of the SEC. And Charles Hudson, the founder and managing partner of Precursor Ventures. He was also previously a partner at SoftTech VC. So with that said, we're going to get started. So Eric, let's talk about you for a second. You're co-founder of LinkedIn, which is actually a very highly centralized platform. Now you're working on this decentralized project. Explain that to us. Has your thinking changed in the past several years? And wait, there's a second part to the question. How are established companies that today aggregate the value of others going to potentially get disrupted?
Well, not that you were going to give me the hardest question first.
We're starting off strong.
Don't waste any time. Yeah, it's a really interesting question, and we've thought a lot about that over the last few months on the project. I mean, what the internet was really originally designed for was to be kind of a decentralized network of a lot of services and a lot of servers. And what has happened over the last 20 years is that there's been a constant aggregation of influence and power into these rather large companies, and we've really kind of lost the whole spirit of the original internet. And so I think one of the really fascinating things about the crypto space is that there's a view that maybe we can return to more of a decentralized model and have a place where there's more democratized access and be able to kind of align the economics a little bit more. So I think you've seen in the press where people who've worked at various kind of social networking platforms have gone on to when they're no longer at the company, talk about how really the alignment of incentives between these platforms and what users ought to have really are different. And we spend a lot of time on the platforms, and they're optimizing for our attention, and that's not maybe necessarily the best thing. And so I think one of the promises of blockchain is to really realign the incentives so that there's a better connection between what people want to do from it and also provide economic opportunity for a more of a decentralized ecosystem to benefit from that without having all of the powers kind of concentrated in these centralized platforms. So how's that?
Very good. We're going to talk to someone else who comes from a very traditional industry right now, Charles. Oh, sorry. Oh, my bad. Okay, so Charles, you come from the VC world, very institutional, and yet, recently your VC hired a head of cryptocurrency research, Lindsay Mall. Why did you do that, and how has that shaped your perspective on ICOs and the token economy?
So it's interesting. I think most of my peers, when they heard about crypto, said this is a huge scam. People are going to lose a lot of money. People are going to embarrass themselves and destroy their reputations. And I think if you're an equity investor, one thing I've learned, and Lindsay's here, and I have to say she's been like a great addition to the team at Precursor, and we will miss her as she moves on to her next venture. The thing that became really clear to me is that crypto brain and equity brain are two different brains. And I think if you as a VC investor try to split your time in the morning thinking about convertible notes and price round and really traditional B2B SaaS companies, and then in the afternoon you try to meet someone who's building a decentralized reputation network or some other project that doesn't want equity capital, that has a really different notion of governance and participation, both from investors and from their community, I don't think you can do both well. And when I started looking at crypto, it felt to me like if equity investing is moving at 100 miles an hour, crypto is moving at 1,000 miles an hour, and it's global and it's 24/7. So if you're not, as an investor, if you're not spending the majority of your time on crypto, or if you don't have someone on your team who's spending the majority of his or her time on crypto, I think you're going to make bad bets. And so when I met Lindsay and started thinking about crypto, I said, this feels like a big enough sea change in the world of investing that it's worth someone at Precursor spending 200% of her time getting smart. And what I will say is like my evolution in the last 6 months has been, I would say, kind of classic VC, dismiss, this seems kind of like a threat to my business and kind of like really scammy, so I'm going to pay zero attention to it, to a world where I've just met a bunch of entrepreneurs who are fundamentally understood in equity, because ICOs have allowed them to invert the process of fundraising and product development. But I think even more than that, it's allowed them finally to take ownership and participation in these projects and give it to the people who are actually contributing as opposed to the people who are investing. And that's like a really big shift. And I think back, I've been an investor half of my career, and I started in the late 90s. And I just think back to like, what would have open source software have looked like if we'd had ICOs? We had like all the participation and none of the economics. And we had not even just economics, we had no way to sort of, other than credits and contributions, there was no really good way to incentivize contribution. Like I remember back in the day, the point for a lot of people of contributing to open source projects, if it wasn't just for fun, it was to become sufficiently noteworthy in the community that you could get a job at a big company. And for a lot of people, that was a path to monetizing the time and effort they spent in their free time if it wasn't just passion-based on these projects. And I think now with ICOs, you have the ability to have ownership for these projects in the hands of the people who really care. And you're no longer beholden to VCs like me to keep the project in business or fund it or to decide what should be built. Actually, the community of people that really care about the project can invest time and money in ownership. And I think most VCs haven't really grappled with what that means for how capital will be raised for companies and how ownership, governance, and control is going to play out. And so like, I think I'm still a novice, but I'm like an engaged novice. And so it's really opened my eyes to the fact that for the things we do in crypto, it's going to require people that I'd say are crypto native for our fund. Like they're going to have to be people who live and breathe this and spend all their time working on it.
So I'm going to open this to all the panelists. And you know, if you can give me your shortened version, are tokens a new asset class? Hey, I'm here to ask the tough questions.
It's interesting nomenclature, asset class. I mean, I think tokens can be a new type of asset, but they might be securities under the securities laws as well. And I can go into that in some detail, what factors we're looking at in some of the past decisions on the commission, by the commission. You know, it's very clear that just because tokens have, or many tokens have utility, some sort of functionality, even if it's currently real, as opposed to for some platform that is going to be constructed in the future, they can still be securities. Let's see. I mean, I can. Do you want me to
let's dive into that in a little bit. Any other panelists want to?
Well, maybe one of the things I could say on that is that we gave away our token.
Okay.
And one of the reasons for that is that there are people who believe it's an asset class. And if you do an ICO, you get non-users crowding out real users because there isn't really a high likelihood that a company that calls themselves a crypto hedge fund has intention to use the crypto. So you have to worry about whether, by doing an ICO, whether you're actually crowding out the eventual use case that the very people are speculating on.
So I want to touch on that for 1 second, because your company actually gave away its tokens. So how are you funding your operations?
With traditional financing. Yeah, there's very well-developed capital markets in the US because of the SEC.
And is your platform decentralized? Is your platform decentralized?
Because it's a hedge fund, we actually have to trade in the real stock market as well. So we can't be decentralized, even if we wanted to, because we're trading in global equity.
Yeah, so.
I think there is a broader question in the community in general of how do you get funding for a decentralized project? Anyone want to answer that one? Take that one?
Well, I mean, I don't know anything about that. I mean, I think that there's a lot of ideas around how to kind of invert corporate entities, kind of traditional structures as we know it, corporate entities, and there's a lot of talk in the community about nonprofits and foundations and how ultimately these ecosystems and these networks really have no owners other than the users that have a stake in the tokens and participating in a network that no at least corporate entity really owns. And so in terms of governance and laws and so forth, it really turns a lot of these models on their heads. And so the funding concept is also kind of mixed into this as well in terms of crowd sales and so forth around token sales, where you're going to the crowd basically and ideally asking them to kind of provide the resources to build out the decentralized network. But of course that's the ideal picture, and then in terms of the actual picture, there's a lot of actually complexities around that, and I dare say also along with the other panelists is that there is quite a bit of speculation that happens today. None of the investors who are investing, the funds who are investing, can use that many tokens to really use and participate in the network. So I think we're still kind of quite a ways to kind of figure out, okay, how do we get to the ideal, to something that is more or less balanced in terms of the incentives around token sales.
So Amanda, if we're going to talk about flipping models on their head, right? A lot of these tokens have to do with decentralized networks, and yet Chairman Clayton has come out and said, hey, a lot of these are actually securities, right? And under which you might have to be registered or under an exemption. There might be certain reporting requirements, and yet the whole idea of a decentralized organization is that if the corporation or the company or whatever the entity is just dissolves or disappears overnight, the token network is still there and it's active and it's functioning. How are we supposed to, how is the SEC thinking about this strange issue?
Right. I mean, I should say, and before I speak further, I should preface all of this by saying that the views I expressed tonight are my own, and not necessarily those of the SEC or its senior leadership. But this is especially true in this realm, right, where it's rapidly evolving, and where the law is still, unsettled as to a lot of these things. There aren't any court decisions, I think, that really go to the heart of when a token is a security, and the law will get clearer as time goes by. As far as decentralization, I would say that our stance would likely be that is really fantastic from a technological standpoint. One question I guess I have for people is how many of these token issuers truly are building decentralized networks, and how many are actually having ongoing management or have tokens that are affiliated with a separate kind of ongoing enterprise. I think that's an important question. But if you talk about networks that do seem to be truly decentralized, like it's an interesting question. Like, can some of these networks comply with the securities laws if they are indeed securities? I think the SEC would say, listen, the technology has to comply with the laws. If the technology can't comply with the current laws, you might have to end up seeking a regulatory or legislative solution. You can't just ignore the laws. So that's what I would say about that.
All right, so quick rapid fire answers from the panelists on this question. Are we just on some crazy hype train?
Yes.
Yeah. And yet you're ICOing.
Yeah. No, but we are. But I think here's the thing is that blockchain is one of these disruptions that has come along, and it's when you look back at kind of the history of technology, all of the major disruptions have been associated with a hype cycle, and I would argue that any significant disruption, it's necessarily the case that there is a hype cycle, and space gets overfunded, and lots of projects won't make it, but within that, there will emerge some successful projects, and so I believe that's what's happening in this space right now.
I just think energy and enthusiasm always attracts rogues. It's like been that way forever. I think even if you go back, I've been reading this book randomly on the history of the mail order business. And it turns out that like in its day, mail order was a pretty revolutionary concept for people, that you could buy things from people far away who you didn't know. And surprise, surprise, like people scammed people. But you also got Sears and Roebuck, you got these like national brands. And so I think almost every really fundamental innovation cycle I've seen, it attracts rogues at the beginning, because I think scammers are better at finding the rough edges of things while it's still being figured out and pushing the envelope than legitimate people are. And I have no reason to believe this isn't going to be different.
And so what needs to change in the industry to kind of, bring us back down to earth a little bit, prevent scams, things of that sort? Anybody? Follow the regulations?
Legal penalties. No, like legal and financial penalties.
Right. I mean, I think it's important to note that the regulatory regime we have that was created after the Great Depression, as you helpfully noted, it's a disclosure regime fundamentally. That's why securities that are offered to the public are made to register and comply with certain periodic reporting requirements and the like. We want investors to have full information about these things.
Yeah. I don't know why everyone is looking at me, but so I think that we're all as a community, learning to become smarter about the opportunities and the projects, and just even in the last 6 months, with the ICOs that's have been happening, you definitely see an increase in the quality level and the standards that are expected for companies that are conducting token sales. So we're all as a community, even though things are evolving very quickly, learning about what makes a quality kind of token or project. And so I think that's going to continue. I think we and also many others who are kind of looking at this in the quality way are really trying to figure out how we can bring more kind of accountability. We're partnered with one of the organizations, the ICO Governance Foundation, which is also really kind of about disclosure, and we're supporting efforts like that and partnering with them as well. So I think there's definitely been kind of a flight to quality that will be good for the ecosystem.
I want to keep on this topic of hype for one more second. So Amanda, one of the reasons I think that ICOs have gone so far so fast is because of the promotion around these ICOs. You've got bounties where it's like, hey, free airdrop if you join our Telegram. Hey, tweet this out and we'll give you a token. They've gotten celebrity endorsements. How are we supposed to be thinking about this? And I hear there's a rumor that the SEC is maybe even going after some investors now. Can you talk about those issues?
Sure. I can't obviously speak to who the SEC is currently planning to go after or not. I would say our primary emphasis is certainly not going after purchasers of these things, right? But purchasers can get themselves into some trouble if they engage in certain forms of misconduct. Purchasers or other kind of affiliates. Touting is one. There are anti-touting regulations where if you are promoting a security, say online or in another forum, you need to disclose if you're receiving compensation from that issuer, and you need to disclose, I believe, even the amount of the compensation. There are specific regulations about this. I haven't done a lot of thinking personally about bounty programs, but I imagine that that it's problematic if you're encouraging people to promote your security without revealing their compensation. And there also, when a security is about to have a public offering, there are also limitations on touting. And I know that none of these token offerers have filed registration statements yet, but I can't imagine that the fact that we're not filing registration statements is going to get you kind of out of that proscription on touting and that during that time period. Purchasers can also get in trouble for market manipulation. These pump and dumps that show up on Telegram and all of that. You can get yourself into big trouble, not just organizing one, but potentially participating in one. Civil and criminal trouble. Insider trading. To the extent these things are securities, all of the prohibitions on market manipulation and insider trading apply, and you have to be cognizant of those. So purchasers and holders of these tokens can get themselves into trouble, but our emphasis is on protecting investors generally, not going after them.
So earlier, we touched on the topic of the fact that ICOs are all about community and community engagement, and hey, we're turning traditional financing on its head. And yet, I think over the past 2 months, we've seen this interesting trend where the pre-sale is for accredited investors, and then the crowd sale or the public sale ends up getting canceled, which kind of seems to go back towards the traditional model. Any thoughts on that?
Well, I think one of the trends, is that in the fall of last year, there were really a rapid increase in terms of the number of token sales, and there really was this kind of phenomenon around ICO fatigue that kind of retail investors, for lack of a better term, were just kind of getting bombarded with all of these opportunities, and whereas they were very enthusiastic about kind of promoting the success around crypto, they were just getting bombarded with all of these things. And so you did see, I think quite a few token sales where in the public part of the sale, they really didn't hit their caps. And so there was a shift to try to do more in the earlier stages of the token sales. So that I think that's one trend. And then I think for this year, I think people are trying to kind of recalibrate around how they can successfully execute these token sales and all the different stages. But it kind of remains a challenge because certainly the crypto space is quite volatile and prone to speculation.
Charles, earlier you mentioned how the VC community might be reacting to this whole ICO phenomenon. Can you give us a little bit of insight into what you're hearing in the VC community? Are they, is there FOMO, or are they like, I don't care?
All of that.
Okay.
All of that, actually. So I think like I would bucket VC responses into two different dimensions. One is, what can I do under the constraints of my current fund with my current investors, with what I've told them I'm going to do? And every VC fund has a limited partnership agreement where you basically tell your investors, this is the universe of things in which I'm going to invest. Anything outside of that, we should have a conversation about it. Keeps VCs from investing in crazy projects. A lot of VCs I know are saying maybe we should go back to our investors and amend our LPA to give ourselves some room to invest without getting too technical. There's a bunch of weird things that can happen with your exemptions as a venture fund if you commingle tokens and traditional equities into the same vehicle. So I think there's a set of VCs who are saying, I want to do this. How do I integrate token ICO investing into what we do today with minimal legal and structural disruption? There's another set of my peers who've said, we're going all in on token. Like, we're done with equities. We're done with B2B SaaS and consumer marketplaces. We're going 100% in on token. And we will either live or die as a fund by doing this. And I think that's like, I don't know, maybe I won't even speculate on a percentage. There are some big name funds where I think if you're not working on an ICO or a token-based product, that partner at that fund has zero time or attention, mental bandwidth for what you're doing. And then I would say there's a ton of people who are just skeptics and hope that this whole thing crashes and burns so they can say, I told you so. And I would say like the majority of my peers think that this is a total waste of time and energy, that there's no real substance here, that but the funny thing is a lot of them have entrepreneurs in their portfolio who I think are probably could make more money through their side ICO crypto trading operations than maybe in the, and I'm being serious, like than in the equity value that they've created by being a founder. And so I think there's a certain nervousness in the venture community that like, it's fun to like poke fun at ICOs, but like, what if you're wrong? Like, what if this really works and it really is a big chunk of the future and you sat on your hands and like, and you missed out. And I think there's a big chunk of VC firms that have been really successful. So I think the interesting thing is the most iconic smart venture firms I know, your USV, Sequoia, Benchmark, they're engaging. Whether they decide to invest or participate, like they are engaged. And I think there's a tier at the bottom of people who are like, I have nothing to lose. The fund I have is already economy of the underwater, I'm doing great. I might as well pivot to something else. I think it's the folks in the middle who have the most consternation because the current equity-based model works reasonably well for them, but probably won't propel them to the top. And my guess is like 2018 for a lot of VC funds is the year of reckoning. Either you're going to commit and put real resources and time against this, or you're just going to say, I'm betting that the whole thing implodes and that our B2B SaaS and other traditional investments will pull us through and we won't embarrass ourselves with our LPs.
So, okay, rapid fire answers again. We're going to start with Eric and just go down the line. What is your great hope for the future of ICOs and what they can accomplish within the next year? 1 year being like a decade in any other industry.
Well, I hope that we get to some sense of kind of a set of best practices for evaluating the quality of these token sales, and we sort of get away from the fact that a lot of these sort of ratings are paid for and not really accurate. So hopefully there's a sense of a set of standards that will start to emerge for how everyone, including whether it's accredited investors or individual purchasers, can rely on to evaluate various projects.
Richard?
Fewer ICOs, and then if there are ICOs, they raise less money.
Personally, I would like to see some of these register as public securities offerings, and because I would love to see what that looks like with respect to a token offering. You know, there's no reason that I know of that some of these can't. So that would be very interesting. And the rest I'd love to see come within regulatory compliance to the extent there's security.
I'd like to see some real follow through from white paper to ship product.
Okay.
I think that's what you really need. This needs to be demonstrated that it's a legit capital raising mechanism for real projects.
Cool. Another set of rapid fire questions for everyone out there considering launching an ICO. What advice would you give them, starting with Eric?
You know, I would say to really look at this as the beginning of a long-term journey. That it's really just like equity fundraising. It's not you're not done when you've raised your round. You are. That's just the first step, and to really look at this as how are you going to be successful in the long run, as opposed to just having raised a successful or done a successful token sale.
Richard?
Sorry, what was this question?
Oh, the question. Advice you would give to folks wanting to launch an ICO?
Well, yeah, I mean, I would say don't do it. Like, first, get an appreciation that it doesn't cost $200 million to write software. It's actually free, so you can write the software and release it and let people use it. And I don't think there's a strong enough appreciation for kind of like what you can do with $200 million. Like you can make a SpaceX. Like, and by the way, you're taking the money from SpaceX.
Or $2 billion.
You're taking money from the real securities.
Amanda?
I mean, my advice would be get a really good lawyer. Read the past SEC decisions on this count, and don't be afraid to call up our Division of Corporation Finance if you think you're on the line and talk it through with them. I mean, I think more potential issuers should talk to us before they launch these offerings. That's my best advice, I guess.
Charles?
You're still accountable to someone. Even if you're not accountable to your VC investors, you're still accountable to your token holders in the community, and it's not a dodge to do whatever you want to be accountable to no one.
Okay, flip question. For those wanting to invest in ICOs and tokens, what advice would you give them, Eric? Oh, by the way, no one up here is a registered investment advisor, so do not rely on their advice. All right, go.
Try to, I think as Warren Buffett says, really try to invest in things that you understand, rather than kind of be, caught up in the hype. Please try to either read the white paper or understand the project and make sensible purchasing decisions.
Richard, don't buy them.
Yeah, you should, if it is a utility token, you should be buying it to use it. So I remember when I bought Ethereum in their ICO, it was like something that was very exciting and very new, and like it seemed like this could be really something interesting. And by buying into it, it got me thinking about it a lot. It got me like, whenever news came out about it, I would read about it, and that's what got me thinking about making an application on Ethereum. So I do think thinking about using it is good. And then also, I think also, good investment decisions are usually contrarian. So it's unlikely that crypto projects are undervalued. And so at this time, there used to be. But now it's like a little bit unlikely.
Amanda.
Okay. Advice for an investor. I mean, I would definitely say that, just because the SEC hasn't shut something down yet or opined on something doesn't mean that they are endorsing it or have made a judgment as to whether or not the offering and the securities are in compliance with the regulatory obligations. I think you should gather as much information as possible. I think in recent guidance that the SEC gave, they actually gave a list of questions that investors should ask with respect to ICOs. And I suggest people go to the SEC's website and look at those, because they're actually, some of them are non-obvious and very good.
Charles.
I guess my answer would be, if you're not deeply immersed in the world of ICOs and you're not getting advised by someone who is, like, don't do it, because it's not like the stock market where most of the information is publicly available for you to analyze on your own. There's a lot of stuff that happens in back channels and chatter, and if you're not part of that community, you're probably the sucker at the table.
Great, thanks. So now is the part of the evening where we launch into audience questions, and I know you have a lot of burning ones. Before we do this, I just want to set a couple rules of the road. So panelists, when an audience member asks a question, just give me a couple seconds so I can repeat it for the benefit of everyone. And audience members, please keep your questions short, no long rambling comments or questions. And then 2 is 1 question per audience member, no like back and forth conversation follow-up stuff, okay? All right, so burning questions. I see 1 hand in the very back. So basically, I guess the question is, US accredited investors are finding themselves locked out of the market because, I guess, foreign ICOs are a little bit afraid to comply with US securities laws. What? Oh, US ICOs, okay, interesting. What's to be done?
I assume this question is for me. I find that really interesting because as an accredited investor, I assume you could participate in Reg D offerings. And so it sounds like what you're saying is that a lot of these entities are no longer relying on Reg D, they're relying on Reg S, which is the foreign investor exemption.
They're just saying they're utility tokens.
Right, that's what they're doing, right? They're trying to fall under one of the regulatory exemptions, likely. That brings up one thing I'd like to note, is that we're going to be looking a lot more carefully at whether offerings that purport to comply with certain exemptions obviously are, and if they're encouraging US investors to circumvent their identities as US investors, or not doing diligence to confirm that people are actually foreign residents. That will be very interesting to us. As far as your overall question, why are you imposing this regulatory regime that's making ICOs scared to take my money? You could ask that, I guess, in any securities context. I mean, the reason they're not conforming these offerings to a registered public offering is because essentially they can. They're getting their capital elsewhere. Like I said, I'd love to see them register so they can take money from small investors. I, again, find it surprising that they're not doing more offerings under the regulations where accredited investors in the US can invest. I think that they have options, and if they're not taking your money, it's because they don't want to or don't have to because they're finding enough capital elsewhere. It's, that's all I can say.
Next question. Sorry, next question. Okay, so there's 2 questions there. I will entertain that. One is, to the extent cryptocurrencies like Bitcoin or Ethereum are securities, how do you go about finding Satoshi Nakamoto? And the second one is, how are we supposed to do 10Ks on these things?
Okay.
10K is a reporting disclosure thing.
Yeah, interesting question. I mean, the CFTC is more involved right now in regulating Bitcoin qua Bitcoin, so I don't have to worry about how to find out who Satoshi really is, which I'm happy about, though I could, it would be interesting to use the subpoena power to try to figure it out. As far as how a truly decentralized network will comply with periodic reporting obligations, that's an interesting question. I would be very interested in whether people have creative ways to address that. Could reporting be automated? You know, I don't know. You know, most reporting obligations have to do with the entity. If there's no entity, you know, I don't know. Then, you know, the fact is none of these offerings have actually registered. We haven't seen people try to accomplish periodic reporting with these sort of entities. I should note that just because the current technology doesn't provide for it, again, doesn't mean that they're exempted from the securities laws.
Jonathan, how are US investors and the SEC thinking about the global nature of cryptocurrencies?
Me again.
You're popular.
We think about that a lot. It creates interesting challenges for regulation and enforcement. I do know that a lot of foreign securities regulators are looking at what the SEC does about these things, and I think we won't necessarily be the only regulators who end up treating them as securities. Beyond that, I guess I'd need a little bit more specific question about some precise aspect.
I actually have a super quick question, which is, how is the SEC thinking about decentralized exchanges?
Well, yeah, you know, centralized or decentralized, you know, there's a reg with all the criteria for what is considered a securities exchange under the securities laws. You know, it's basically, you know, matching offers and purchases. If your platform is a platform for trading instruments that are securities, they either have to be, the platform has to either register as a national securities exchange, or it has to fall under an exemption. And there are exemptions that might well apply. There's a reg called Reg ATS, Alternative Trading Systems, that could cover certain trading platforms. Putting aside the question of decentralization versus centralization, those have to be affiliated with the registered broker-dealer to comply with that regulation. If it's so decentralized that there's not an entity really to affiliate, you know, I'd question whether they could comply, but I don't.
Gentleman in the blue. Thoughts on peer-to-peer transactions with regard to the supply chain industry? Eric?
I mean, yes, I think blockchain technology definitely, you know, goes beyond, you know, the swap of tokens. You know, there are a lot of projects right now that are basically, you know, designed around how do you trade tokens and so forth. But really, blockchain is a general technology, so you can for many different applications, and so you can see many different kinds of applications that you know, arise in many different forms, from kind of the decentralized networks to maybe there are industry consortiums that will band together and, you know, create industry kind of blockchains, to also kind of the enterprise blockchain.
So the question is, Wyoming just passed new legislation basically recognizing utility tokens as non-securities. How does that work within the federal framework?
The federal framework is the federal framework. We don't incorporate state level definitions of securities terms. I can say that generally. I have to admit, I don't know anything about the Wyoming legislation yet. Under the federal securities laws, it is now very clear after the Munchie order that came out last December that at least some tokens that style themselves utility tokens can also qualify as securities under the securities laws.
Numerai, what are your token economics and incentives?
You can stake Numeraire, and then if your model is good, you get your Numeraire back, plus you win some Ether and Numeraire. And then if your model performs poorly, then we burn your Numeraire. And so it's staking and burning. And the reason that's good is, like, you can see on the blockchain that we have burned it. And so you're not like in a deal with us where we win your tokens or something. Like we're using it for the application, where we want to see if you're willing to express your confidence, you're willing to risk having those tokens burned.
How do you deal with marketing compliance when you are raising capital from non-accredited investors under either regulation crowdfunding or regulation A+? Eric and Amanda.
I'll go first.
I mean, yeah, I don't have a lot of specific advice to give about how to market your ICOs. Munchie did lay out and discuss in quite a bit of detail a number of factors that led the commission to conclude that that was a security. Now that doesn't mean if your token lacks all those factors that it necessarily isn't. There could be other factors that would put someone within the Howey analysis on the side of a security. But you know, there are markers that you can avoid, you know, and some of these are promotion and a token structured such that it's meant to increase in value once the platform is created and it's touted as essentially a good investment rather than merely utility. And it is true that in Munchie, they did make these sort of representations in the white paper, but they were also in the marketing materials, so that's a very good point. We do look to the marketing materials and not just the white paper when we're assessing whether a token looks like a security. You know, Munchie created a limited supply of tokens and said that they would burn them specifically to prop up the value and keep increasing them. I'm not saying that that's necessarily what you guys are doing. But this fed into purchasers, this fed into purchasers' expectation of profits under the Munchie test. And I think it does raise a point about a lot of these offerings that I find interesting to contemplate, and I would actually love some of the other panelists maybe to speak to. Why do so many of these offerings have an artificially limited supply of tokens? Some of it might be inherent in the technology, let me know. I mean, you know, it can't be infinite, clearly. But, you know, most producers of utilities don't limit the amount they want to sell. You know, most entities that come up with a software package they want to license want to sell as many as they can. You know, or if there's a database, they want to sell as many credentials to that as they can. You know, I'd want to understand if there's any reason inherent in the technology that these offerings are limited in number, or is it merely to preserve investment value? Does it have anything to do with the actual utility? That's something that we would look for and think about. You know, in Munchie, the token had no functional utility at the time of the offering. The platform wasn't yet built. So, you know, it seemed like sheerly a common enterprise that was relying on the efforts of others to have any ultimate value. You know, so very much like Howey.
Lots of issues there. Just my practical advice as a former securities attorney that had to deal with, you know, Reg A and Reg CF offerings. Get a good attorney, make sure they're looking over your marketing material, make sure the marketing firm that you hire has some experience in financial services marketing, and make sure that they have their own counsel who is also looking at everything, the website, the white paper, all representations, even the ones being made on Telegram and all of that kind of stuff. Do you want to repeat the question? Sorry.
Oh yeah, the question was briefly in our protocol that we support anonymity, and how do people claim their identities. And so the answer to the first one is that we do support anonymity. It's already out there in the world. We also support multiple personas because we believe that that's the way that the world operates already. And then secondly, in terms of claiming identity, our protocol is purely opt-in. So you know, bring your identity to the protocol and the network, and you know, you've got your reputation data associated with it. So that's how we're solving that problem.
The question is, what is going to be the effect of ICOs 30, 40 years from now? And for Amanda specifically, are these a new asset, or are they utilities or securities?
Yeah, in 30 to 40 years, I believe we're going to be all very used to tokens. We'll be using them just like we're breathing air today.
Richard?
Yeah, I think that if you have, we've figured out a way to make digital scarcity with Bitcoin, and now with Ethereum and other things like that, everybody figured out that they can mint their own scarcity. And even if it's infinite and there's a lot of inflation in the scarcity, it won't matter because there'll be finitely many at any given time. And that's, that part of all this isn't going away. So I think that's the kind of challenge for regulation, but also that technology cannot go away.
Amanda?
I have no reason to think these things won't still be around in 30 or 40 years. I think the technology is exciting. I mean, those of us in the SEC cyber unit are there partly because we're interested in this stuff. We think it's interesting. Fortunately, I think in 30 or 40 years, the regulatory lines will be very clear. There will be tokenized securities offerings and tokenized investments that are clearly securities. And I personally think, and I'm not sure that everyone I know at the Commission would agree, but I personally think that there will also be classes of tokens that are recognized to be not securities because they don't cross that line. Where that line is precisely right now, I couldn't tell you exactly.
Because I just say, we spend an enormous amount of time as humans keeping track of stuff, and it's really inefficient to have human maintain ledgers, and I just think there are a lot of things, particularly in financial services and politics, where there's humans or dumb machines that are keeping track of stuff. I think in 4 years we'll look back and say, what in goodness name were we doing? And that will all have moved to the blockchain.
I can't even begin to imagine what the world looks like in 30, 40 years. Maybe it looks like the Jetsons with flying cars and crazy AI, and I don't know, maybe we have quantum computing. So I don't, maybe 10 years, maybe 5 or 10 years from now, I would say like, maybe issuing your own tokens will be something everyone just does, but 30, 40 years from now, like I don't even know what society looks like or how many planets we're on, so yeah. All right, so that is pretty much all the time we have for today. Thank you so much. Thank you to our distinguished panelists.